Welcome back to Finergy, the channel that's dedicated to helping you take control of your finances and build wealth. If you're new here, make sure to hit that subscribe button and turn on notifications so you never miss one of our money-saving tips. In today's video, we'll talk about how to start investing with little money. A lot of people think they need thousands of dollars to begin investing, but that's simply not true. You can start with as little as $50 or $100 and still make progress toward your financial goals. So, let's break down how you can start investing today, even if your budget is tight. 1. Why start investing early? Before we dive into the specifics of how to start investing with little money, let's first talk about why investing early is important. The power of compounding. When you invest early, you allow your money to grow over time through compounding. This means that the money you earn on your investments starts earning money itself. The earlier you start, the more time you have for your investments to grow. Building wealth over time. Investing is one of the most effective ways to build wealth in the long term. Even small contributions can add up over years. So, whether you're saving for retirement, a down payment on a home, or future financial freedom, investing is a key part of the equation. You don't need a lot of money. It's a common misconception that you need a large amount of capital to start investing. The reality is, there are many options available for people with small amounts of money. Let's explore some of those options next. 2. Investment options for beginners. There are several beginner-friendly investment options that allow you to start with little money. Let's look at some of the most popular choices. Index funds and ETFs, exchange-traded funds. One of the best ways to invest with little money is by using index funds or ETFs. These funds allow you to invest in a broad market index, like the S&P 500, with a small amount of money. With ETFs, you could buy a single share and immediately gain exposure to hundreds or even thousands of companies. Why they're great? Low fees. Most index funds and ETFs have very low fees, meaning more of your money stays invested. Diversification. You don't have to pick individual stocks. These funds offer built-in diversification, which reduces your risk. Accessibility. You can start investing in many ETFs with as little as $50 to $100. Robo-advisors. A robo-advisor is an automated investment platform that creates and manages a diversified portfolio for you. You can start investing with small amounts, often as little as $5 or $10. Robo-advisors use algorithms to manage your investments, and many offer low-cost options. Why they're great? Low minimums. Some robo-advisors allow you to start investing with as little as $5. Automated. Robo-advisors automatically rebalance your portfolio and adjust investments based on your risk tolerance and goals. Fractional shares. In the past, buying individual stocks required a lot of money. But with fractional shares, you can buy a portion of a stock for as little as $1. This is especially useful for expensive stocks like Amazon or Tesla, which may be out of reach for many new investors. Why they're great? Access to expensive stocks. You can own a piece of a stock even if it's priced high. Invest in what you believe in. Fractional shares allow you to diversify your portfolio, investing in different sectors or industries. High-yield savings accounts, HYSA. While technically not an investment, a high-yield savings account offers a safe place to store your money while earning interest. You won't see big returns, but it's a great place to park your emergency fund or savings while you decide on other investments. Why they're great? Low risk. Your money is protected by the FDIC, up to $250,000 per depositor. Accessibility. You can easily access your funds if needed. 3. How to start investing with little money. Starting to invest with little money doesn't have to be overwhelming. Here's a simple, step-by-step guide on how to get started. Step 1. Set your financial goals. Before you start investing, it's important to know why you're investing. Are you saving for retirement, a down payment on a house, or just building long-term wealth? Having clear goals will help guide your investment choices and ensure you stay focused. Step 2. Create a budget and emergency fund. You shouldn't start investing unless you've built a solid financial foundation first. That means setting aside some savings in an emergency fund, ideally 3 to 6 months of expenses, and having a budget in place. This will give you peace of mind and prevent you from having to sell investments in case of an emergency. Step 3. Choose your investment account. To start investing, you need an account. Here are a few options. Brokerage accounts. These are regular investment accounts that you can open with low or no minimum deposits. Popular platforms include Robinhood, Charles Schwab, and Fidelity. Retirement accounts. If you're investing for retirement, consider opening a Roth IRA or a 401k if your employer offers one. These accounts offer tax advantages, but there are contribution limits. Step 4. Start small and be consistent. You don't have to invest thousands of dollars at once. In fact, it's better to start small and be consistent. Even if you can only afford $50 a month, set up an automatic deposit and stick to it. Over time, this can add up and grow significantly. Step 5. Diversify your investments. Don't put all your eggs in one basket. Make sure your investments are spread across different types of assets, stocks, bonds, ETFs, etc., to minimize risk. Diversification helps protect your portfolio from market volatility. 4. Overcoming common investment myths. There are several common myths that can hold people back from investing. Let's debunk some of these. I need a lot of money to start investing. As we've seen, you can start investing with as little as $5 or $50. You don't need a large amount to get started. Investing is too risky. While investing does carry risk, there are ways to reduce it, such as diversifying your investments and sticking to long-term goals. Remember, the stock market tends to grow over time, and staying invested is often the best strategy. I need to pick individual stocks to make money. Investing in individual stocks can be risky and time-consuming. Index funds, ETFs, and robo-advisors offer diversification and are great options for beginners who want to invest with little money. Starting to invest with little money is entirely possible, and it's one of the smartest decisions you can make for your financial future. By following these steps, you can begin building your wealth today, even if you don't have a large amount to start with. Remember, the key is to start small, stay consistent, and choose investments that align with your financial goals. As you get more comfortable, you can increase your contributions and expand your portfolio. Thanks for watching. If you found this video helpful, be sure to like, subscribe, and share it with others. The journey to wealth starts now. Let's start investing together.